We're looking at an inflation rate that is ticking up. No surprise there. Most emerging markets and frontier markets are experiencing push factors, particularly coming through on food and fuel as well. We're looking at an inflation rate, as I mentioned, of 6.54%. Was this a surprise to the markets that we've seen an increase in inflation, given the fact that we've also seen an interest rate cut this year?
Well, I wouldn't say it was a surprise, because I think the trend has been actually happening from December last year. But of course, also we do have the general price levels, across the globe, which are on the increase. So I think we have been looking at it, and we knew it was. And then of course we do have the drought, and therefore, the food component is quite a big component in the calculations of the CPI and inflation rates. So so we've got less of the supplies coming in. And I think that people are expecting this. Of course, the other thing is the fuel issue that is now on the upward rise. And again, the general households also spend a lot on fuel, especially kerosene, which if you check from the base year of February last year to now, it has increased by over 35%.
Well, Anthony, that's not expected to come off at all going forward, given the fact that we're looking at oil prices and Brent crude sitting at $113, $114 a barrel. Food prices globally seem also to be rising quite extensively. What do you think the next move will be by the central bank governor? Do you think that we should see an interest rate hike to try and tame inflation, or do you think that it's manageable at the level of around 6.5%?
It will be difficult for me to say that, because you see, first of all, he's already got a target of 5% from the monetary policy point of view. I think he'll have to play. He'll have to see how best he can actually try and tame the inflation rate. So most likely he might move interest up.
What impact do you think the interest rate cuts earlier this year has had on the inflation figure?
Well, the beauty of it is that at least the cut of inflation also increased a lot of, spiced up the economy. But I wouldn't. To me, I don't think that generally that they did play a very big part on the inflation rise, because once you look at there are two components within the CPI, that virtually the household consumption, and that is the food and the non-food, which is actually we are talking about nearly all, heating, petroleum, and all this, and those are actually sometimes beyond him. So I think he has to see what he can do to see whether he can bring down to be able to tame the inflation.
Also quite interesting.
But we hope with
please continue.
Yeah, because I hope that he will be giving a statement maybe sometime in the coming few weeks on the best way he thinks government should tackle the issue.
Professor Njuguna Ndungu has also been reappointed as the central bank governor of Kenya. What is your thoughts on this? It seems it has been taken quite well by the market.
It will be difficult for me to say, because I know him personally and I've worked closely with him in a number of things. Well, I think he's still the best suited for the job, and I think the government at least did what it thought was fit under the current circumstances, because he's managed to tame the interest rates in the first place, and of course also during his term we have seen the expansion of a number of innovative banking systems, the M-Pesa and all these other things, which is it's a good thing.
Let's touch on some of the subcomponents on a year-on-year basis. Food and non-alcoholic beverages coming in at 9.8%, and clearly that above the target range as well. One subcomponent that really stuck out for me, that is very much in a deflationary scenario, is communication, which is posting a deflation scenario on a year-on-year basis at 26%. Quite interesting, because this is where we're also seeing a lot of the price wars coming to the fore as well in Kenya.
Well, of course, this is a base year effect, because the prices were totally different in February last year. But you see, they have virtually nosedived by quite a huge percentage point. Well, I think what we need to see is because we don't see it going up anymore. I mean, we are not seeing the communication sector, especially where the telephone, the mobile telephony is. We don't see it going up. I mean, any further. Most likely, they are going to stabilize at that. So I think that should be maintained almost at a flat level, during the calculations.
Well, Anthony, I mean, looking forward, and of course we saw the reweighting of the CPI basket as well. What kind of role is food and transport going to have? And how often do you think that the central bank is going to be relooking at the reweighting of the basket?
You know, the biggest problem that we have is that the basket is generally calculated, you know, through what we call, we do undertake what we call a household expenditure review. You know, survey which was undertaken in 2005, 2006. We intend to take another one beginning early during this year that will actually give us, maybe will help us reformulate the consumption basket. But I think in the meantime, we're also re-looking at that and trying to work backwards and trying to see whether some of we can check, you know, a trend and see whether the weighting can change. So from the Bureau point of view, we're also looking at the weighting of some of the issues since the last time that the household expenditure was done.
Well, Anthony, I mean, looking back at the month of February, as we mentioned, we've seen inflation ticking up. That is expected to continue. What are you pricing in as an average inflation rate for 2011?
Well, at the annual rate, I think we should be able to slide back maybe to between 5 and 5.2 or 5.5. Once the beauty of it is once we get the reins on, and the food, you know, because they're basic foods that generally will be in more supply, then you know that will actually bring the index down. Our main worry, of course, is the fuel which actually translates through the whole industrial base and also the food supply chain.
Do you think it's also going to be a combination of the factors that you just alluded to and perhaps some tightening down the line?
Yeah, I think that should be coming.
How much of an increase are you expecting this year?
In GDP?
No, coming to the fore on the monetary policy side of things on interest rates.
It will be difficult for me to say right now. First of all, I would want to see how the governor reacts to the increase in inflation.